Right, so I'm Michael Nolen with Atlantic Shores Sotheby's International Realty, and I'm here with Sam Kotzur, who's one of my favorite loan officers in town. Sam, you want to tell them a little bit about yourself?
So my name's Sam Kotzur. I'm with CMG Home Loans. Our office is right here on 78th Street in Ocean City. Doing this long time, longer than I'd like to admit for. Done focusing on the Ocean City market, condos, second homes, investments. That's much what I've been doing.
I was looking back at some of my Facebook memories, and about 9 years ago, you and I did an interview like this. I remember we talked about doing these more, but now, we are 9 years later.
9-year rotation, we made it back.
But we'll definitely try to make an educational video that's going to cover much sooner than 9 years.
Right? If not 9 years, we'll be back on the market. Right?
Yeah, right? So I really like to kind of the low interest rates. And with like a lot of Facebook videos of local agents, and not just here in Ocean City, but just are really now's the time to buy because interest rates are low. They're much lower than they have been. I know that's huge because we deal with a lot of second homes and investment properties. But right now, today, they're talking low sixes. But I know because I educate my clients so that we're back the onion, right? And just trying to dive into everything, their particular property that they're buying, what for, and all the things that come into getting a loan, what that interest rate looks like. Fill us in just a tad.
Okay. Yeah, there's a lot going on, a lot of information and data to kind of look at. A lot of it happening even today. The October is wrapping up. 2 o'clock, we're gonna have an announcement from Chairman Powell. The anticipation is another quarter-point cut on the Fed rate. Investors, everyone has...
How does that look, that quarter point? Does that mean that they're going to go down even more right now?
No, so investors, mortgages, they've already priced that in anticipation. Investors work on speculation and where they anticipated it to go. So if they do follow through with this, don't expect rates to do anything because they've already put this in. There is another Fed meeting in December with more talks of dropping another quarter point. But I do want to point out that they're changing is the federal funding rate, and what that is it's the rate that banks leverage their reserve monies uncollateralized to other banks.
Okay.
It is not a direct correlation with mortgage rates. We bounce off of the 10-year Treasury, which is which is really the lowest it was in April of 25.
And right. So that 4% talking about. Banks then are getting money at that rate, and then based on where they're investors and what, then we're getting to that 6% rate, and that's really where we're getting into that competitive rate. So just because that 10-year at 4%, that doesn't mean you're getting a 4% loan.
That's correct. And when you get the data that presents itself now, the national average, from anywhere is right around 6 and an 8. Okay, that's the national average. There's a lot more that goes into that than here's your rate. Okay. Credits, occupancy type, whether it's a second home, primary, investment, property type, whether it's single family, a manufactured home, a condo. There's a lot of layers to this proverbial onion that we talked about that, 6 isn't a realistic number as you start diving into more details.
But exciting.
Yes.
Right? Because rates are getting to an aggressive point. I mean, they're not were COVID times where we had those real low 4% rates or into the 3s, and I remember default days going into 2s and really low 3s, and that was what everybody was. That was at that time.
Yes, you are trending lower. That is they're not going up higher. They're starting to move in the other direction. We're starting to see that movement. We're starting to see more activity because people are getting excited because they are seeing. It's just. We like to set the proper expectations of what this looks like, that just because you say national average, that's not size fits everyone. A lot more factors go into it rather than just that number.
All the promotions that anybody out searching for real estate is seeing is low rates, low 6s, now's the time to buy. And I think that is something that is very interesting. And I think that if you are thinking, that should be something that's in the back of your mind that, all right, rates that's really great. But I know as an educator myself, I have clients walk away from a deal because it just doesn't work out. But I want to set the expectations from the beginning. Real estate's all about setting expectations.
Correct.
Through the transaction, making sure that from that first phone call, they understand what they're getting, they understand the process, they're in that understanding. Instead of, hey, low rates. Let me set you up on my searches, right? Any agent can do that. You can do that on Zillow, Realtor.com, no matter where you are, right? Then we go out and start seeing properties. Let's go on a showing tour. Let's see things. And you're really excited. Man, I'm real close to a beach property, right? I know my credit's 780, on all those free. And then it's time to talk to you. And you start to dive into, well, guess what? You're here in Ocean City, over 1,500 condo buildings that are here in town. The condo changes it, an uptick in rates, so a little bit more. Well, you want to buy a second home, 10% down. That changes things.
Correct.
Right? Versus 15 or 20 or 25%. But you go into an investment loan, that changes things even more, right? So condo,
it's all risk-based.
Yeah, so there's all kinds of layers that we want to look at with our clients to make sure that they understand, up front what it's like for them in buying a property.
Correct. And the question we get often a lot is, why is a condo priced differently than a house? We get that often. We still used to own it. Why is this? Well, the simple answer is when you own a home, you are solely responsible for the taxes and insurance. One person that they rely on, that's you. When you buy into a condo complex of, let's say, 20 other owners, well, you're relying on your owners above to make sure they pay their dues, so that way your insurance is paid, maintenance is kept on the building, a lot more things. So there's a lot more risk-based that you're relying on to make sure that they're paying their portion as well. So that's like the short answer. You see a condo pricing different than a single family, which is a very common question that we get.
Yeah, and I know that with me a lot as well. And even buying a condo, it's a different ownership to understand what a limited common element is versus a general common.
Sure, master insurance.
It might only $60 a month rental coverage on a $50 property. A little high.
Right.
And that's because condos paying the outside. So those are good points. And I think that is what I really like to cover here, and diving into a little bit more at another time, going into second homes, investment properties, and what that looks, because there's a lot of products there. From the conventional, you got the DSCR loans that people like, it's the new hype. I know I've personally used them. There's advantages, there's disadvantages. There's the DSCR loans for investment properties, but that's a topic itself, right?
Hopefully before 9 we'll get to that one.
Absolutely.
But even with the different, there's things constantly the mortgage industry is adapting for that, we're not prepared. For example, new guidelines on, government federal workers. Talking about this months ago, now we have to adapt. We have to pivot to ensure a smooth transaction.
And is that because of the shutdown?
That is.
Okay.
So there are things in place because there are things that lenders and investors require, government agencies that are shut down that you just can't at the moment.
Yeah. So that's the as a federal working for the then in that little kind of uncertainty, right?
A lot of uncertainty.
Is any of that what's happening with the rates in the market? Or
so that's not really affecting much of the market as far as like continental United States shut. A lot of it's activity that's overseas. Tariffs and trading and that's affecting the 10 bond. That's what's moving that. A lot of still uncertainty of what's happening.
Yeah, and I know inventory's still down. 9 years ago, would have had 2,000 properties easily on market. A lot of options. You could show if it wanted X, we could show them X and everything around it.
But I think there's more inventory starting to pop up now, right?
A lot more, but still not back to today. But we still want to be, smart about that. That might be limiting the sales just nationally and those statistics, because there's just not as much to choose after. I think prices have very well stabilized. There's a seller side of the market, there's a buyer side of the market, depending on property type. So there's a lot even that we could cover. And
so where are we at now? Is this a good someone to buy down here?
I think it's great.
Okay.
I've always our busiest time. Everybody finishes up in the season. They've had their last year owning a beach place. Maybe they're redirecting their after the season because they have an investment property and they're ready to unload and redirect their investment. So now inventory starts to hit the market, and we still have about a month and a half left. A good opportunity to get that initial fall inventory. It'll slow down a little for new inventory come after Thanksgiving, but then we're right back up again in January
to get ready for the season.
Yep. So now is a great time because you can get into a property, you can start looking for it, you can get any tax deductions that you need for anything for the year, if you're trying to get any types of write-offs. Otherwise, you could also prepare for any type of renovations that you might want for
Carry that through without any interruptions,
Yeah.
potential renters or anything like that.
and position yourself without rush to get a property ready. Not that everything needs a lot to it, but I always a good month or 2 months, depending on what you're doing. If you're just staging, a month or two is probably an appropriate time frame to build the relationships with any of you to rent a property. So it gives you a good little carry time, and it gives you an opportunity to enjoy it.
Start too, yeah.
Yeah, and then you market early and start feeling things out for the spring market. Our properties do really well in the spring. Gives a little taste there, and then our peak Memorial Day, but our fall now is huge. So it gives a good opportunity to kind of test the waters a little bit. In the spring, you're just a little more on a time crunch to make that first initial
to get that in.
season. Yeah, but still a great time.
Good.
Waiting until summer, it's a little there.
Sure.
But yeah. So I think thanks for coming out. I know it's
Appreciate
a rainy day today in Ocean City, but this was great. I think summarize, be excited, lower, right? It's something to really, definitely something that if you're thinking, start making the conversations, but talking to a professional like Sam, myself, and really figuring out what it is you're looking to buy, what the purpose of buying that property for, primary home, second home, investment property, all plays a factor. And all the other little things.
Want to check into it? It takes less than 3 minutes. A simple phone call, gather some basic information, very non-intrusive. We have the ability to run a soft credit report so nothing affects your credit whatsoever, and we'll be able to pop that for you really quick of where we're at to set the table for you, moving forward.
Yeah,
what it does.
So many great topics that we can cover here just to educate about mortgages and what each thing looks like. I'm excited about that.
Yeah.
We need to dive into it more.
I've always told people in the past, mortgage rates are like cars. If you want the cheapest, here's the model. If you want to increase and you want a sound system and all this here, it exponentially goes up. So when at these averages and things like that, that's your base model there. So things that's always stuck with me from this business and what I've always kept, trying to teach as well.
Yeah, just to use that as a quick reference point while I have it fresh in my mind, a new home, new construction versus an older home. There?
No difference.
All right, but in the car it would be. Right, so I thought that, so just something that popped in.
Yeah.
All right, cool. All right, well, thanks for checking this out. And I'll have a full write-up on this on my blog at myrealestateSpot.com/blog. And if you're a subscriber, you'll get it on Thursdays. If not, subscribe, check it out, and be looking to another post, another topic to cover about mortgages in a much less time frame than 9 years.
Much less there. If you need to reach out to me, cell 724-840-2912.
And you'll have all the information in my blog article to redirect you over to Sam. Great resource, great friend of mine. Even funded my own properties in the past.
And we've been in weddings together.
And we have. We won't go into that right now.
Next episode.
Hopefully not. Right? There's a little leverage on me there. But all right, great. It was great having you, bud.
Appreciate
Always
it.
great. Thank you.